Okay, Sheetal, it's been a while since we've done an in conversation video. Um, a lot to catch up on. Um, this is going out at a time where actually we've had a second vaccine announcement,
Yeah,
um, with the usual caveats that it's early days. We're getting, and obviously Boris is now self-isolating at the
yeah.
same time. Cummings is out, but we're in halfway through the second lockdown, however the format is. So in our last chat, we decided it'd be a good time to kind of revisit where we are.
Yeah,
You've also completed a big merger in your practice,
yeah.
so you've got more partners and more things going on. And I know you're going through a bit of an exercise in um, assessing your clients' needs. So where are you at the moment in terms of um, those clients that have been affected by COVID? Where do they sit in terms of how they're feeling about where we're at now and the situation and the second lockdown?
So yeah, really interesting times. Well, it's we've got now 9 partners at our practice, so we've got really good strength there. So we had our war room meeting a couple of weeks back with anticipation with the second lockdown coming in, even before that with the tier systems and coming in and how it's affecting all our clients. And then what we realized was actually everyone planned what they could in March based on things coming back semi-normal in the autumn.
Yeah,
Boris was saying we're going to be back to normal. They estimated that we needed a 50,000 bounce back. They estimated that furlough would be wound down in August because we'd be going back to normal. And again, what's happened? We haven't gone back to normal. Furlough's come back in.
extended to
Look,
March, right?
extended to March. We've got the tier system came in, and then after that, a lockdown in a different shape than the other, previous ones. But again, it's affecting a lot of businesses and a lot of sectors in different ways. So what we done as a group is we sat down, looked at all our client portfolio, the sectors they're in, where they are in their life cycle and that, and just anticipating where they need help. At the same time, we've gone all to the lenders as well, trying to get as much information there as possible. Like we've gone to all the high street banks, NatWest, Barclays, we've gone to IFAs, we've gone to second tier, third tier market, funding circle and stuff, and just finding out what is out there for businesses and stuff. And again, everyone's had to revisit. So what we after speaking to the banks on the first attempt at C-bills were in a really hard place. So it took a lot of time because they were lending the money, but if the client defaulted, yeah, they would have to go to the government to get paid back, which will take some time. And are the government going to pay it back? Because what the government done is not lent everyone money. They were just underwriting what the bank does. Yeah. So there was a lot of risk put onto the bank initially. There's a lot of
And a lot,
confusion.
and it was political. It felt like it was announced without full consultation. So I think the banks felt, a bit pushed into
Yeah,
responding.
yeah, and which is not great for the clients that needed that help there and then. It was literally lockdown. Dan, you got shut. Yeah. So they needed that help there and then. We got it with the furlough. We got the rate relief. The bounce back loan was really good because people that couldn't go through the C-bill and jump all them hoops, at least you got access to the bounce back loan.
And that was and the bounce back loan from memory was obviously very quick.
Yeah,
It might have been a slightly blunt tool, but it got out there quickly. And I think
yeah,
the government wanted that to happen.
yeah,
Just thinking back to the C-bills back then, probably a bit like supermarkets that didn't have an
yeah,
online offering that really could cope.
yeah,
They were focusing on existing customers, and even then they were struggling to process that because their teams were at home.
yeah.
We're now in a very different world where a lot of these bottlenecks, I guess,
Yeah.
are open. Is that what they're saying to you? That they're more
Yeah,
able
so
to respond?
they're more able to respond. They've got a bit of an understanding of how it all works and the client need was. And what's happened here with the second lockdown, and I was expecting a bit it to get really dire, but then when the vaccine news came in, we kind of like took a step back and we think, okay, the vaccine will get introduced early spring, late winter, early spring. It's going to be sent out in batches. By the time the population, it goes through the population, starts with the vulnerable, goes through the population, you're looking at late spring, early summer. Yeah. And if you take a step back, just be a bit cautious. And even though it's out in the population, the vaccine, when are people going to go out spending? Are people going to return to the office? Are tourists coming in? So maybe September, you'll be back to pre-COVID levels or 90% of pre-COVID levels.
I think
Which
that's
is,
probably pretty reasonable. A lot of people feel
yeah,
that way, as
yeah,
much as we can be certain of these
yeah,
things.
things to measure it is when the football fans are allowed to go back into the stadium, and that'll be the beginning and probably of the next season. So, and we can have weddings and stuff and events, and that's when you know you're getting back in to a semi-normal. So that's light at the end of the tunnel, which now makes the bank's job a lot easier, because when they were doing the initial seed bills, they didn't know when the vaccine was going to come out. The government was saying we'll be back to normal. Scientists were saying it's going to take a couple of years for a vaccine to come out. Yeah, so now you've got light at the end of the tunnel. So it's given, so it changes the whole risk profile. Yeah,
There's an element of certainty that they can now hold on to, and at the same time, I guess the government has done things like say furlough's going to be here till March
yeah,
time. So they've not
yeah,
done like we're going to extend it for bit by bit. They've made a real leap. So some of
yeah,
these things are still there. Yeah.
yeah. So, so the way we look at it is that the banks now needs information, yeah, to reduce the risk. It's to do with some sectors are going in different situations to other sectors, like tourism, hospitality, even construction when it comes to real estate and flats at town centres and stuff. Yeah, retail, of course, there's a big shift towards online, so it's a bit different from a lot of sectors. But what we need to do is get the information over to the bank so they can make a really good decision. And the way we would do that is we look at it in a three-point. You'll have three-pronged attack. Yeah.
Yeah.
The first is your historic data. Yeah. So anything, your historic financial statements that have been filed at Companies House, HMRC, yeah, pre-COVID. And where we've got an advantage is most companies have a year end of 31st March. So
Yes.
people probably have time to get really good accounts in, because the COVID would have only affected them for 3-4 weeks of that year. It was mid-March when like it was the messages started coming out and went into lockdown. So the government want to lend money to business, but they don't want to lend it to businesses that were in a bad place before COVID. So that's why the historic financial information is really good. You're proving to the bank and the government that before COVID was here, you had a really good business, sound business. Yeah.
Yep. Yep.
Hopefully listen to your accountant, paid tax efficiently, yeah, showing
Yeah.
good profits, made yourself investable before COVID. Yeah.
Yep.
Getting
Makes
your
complete
historic
sense.
information in place. The second, yeah, is to do with post-COVID. Now we're going to do, I call it the car crash period. So this is until things go back to normal. Yeah. And we put a finger in it. Yeah, I think September might be normal. So we've got to do the car crash period. Now the car crash period is, let's say, March till September. You have your actual figures, your management accounts. Yeah. So you build them up quickly. Yeah. Most people are on digital platforms. They're doing MTD. They use software such as Xero, QuickBooks Online. You've got a very proactive accountant. So you should be able to quickly get your management accounts actuals up until, let's say, 30th of September. Yeah.
And just to cut in there slightly, if you're the sort of business that has accessed certainly C-bills, you
Yeah.
would have had to have good MI. You would have had to prepare stuff.
Yeah.
So
Exactly. So you would be in a place.
even if it wasn't
Yeah.
enough to deal with, because there was an expectation, I think, some months
Yeah.
ago that we would be coming out of this, and when we were going out, eat out to help out, we
Yeah.
could sort of feel like it was going to be a lot better than it is.
Yeah. Yeah.
Okay, so okay,
So you got that. And now what that will give you is your balance sheet position, yeah, up until 30th September. Yeah. And that balance sheet position represents your working capital. That's where you are now. That's actually where you are. Yeah.
yeah,
And then we do a forecast until September. Yeah, which is still part of the car crash period.
mhm,
Yeah, you do your forecast. Yeah, worst case scenarios, because now your VAT's going to have to be paid. Anything that's been deferred to the landlords, the VAT, HMRC, loan repayments. Yeah, even your drawings, like if you're a sole trader or limited company, you might have cut your dividends because you didn't have to start paying your mortgage. You got holidays from certain policies. Yeah, that means all your deferred payments now are coming in. Yeah, so you do a forecast. Yeah, up until September 2021. Yeah, and then again you look at your balance sheet. Where is it? Yeah, that movement is what you have to borrow. That's the bank wants to see that.
So they
They
want
don't
to
want to.
see a clear analysis of what you need to survive. And I guess for many businesses in this sort of period coming out of it, I guess the uncertainty still is, are we going to have some form of mini lockdown? What is the return post December going to look like whilst we come through this?
Yeah,
But we've had a pretty rough ride along the way. So you've got some
yeah,
track record now, haven't we?
yeah. We've got some track record, and we can make some assumptions. Yeah,
Yeah.
and again we've gone through it. We know that maybe it might peak again in February, March because of the weather, winter, go along with flu season. But spring, you probably won't get a lockdown in spring. The R rate will go down because of the weather. We're going
Yes.
to be out a bit more. So you got out your assumptions, yeah, and then you get your balance sheet where you are, and that's what you got to borrow. You're not borrowing to repay loans, you're not borrowing to take more dividends out. You're borrowing to survive, yeah.
Yeah.
And there's the third part of the attack. You do your forecast, yeah, for the next 2 years minimum, yeah,
Yeah.
showing that you're able to pay back these loans. Yeah, we don't need to go back and reverse the whole position in 2 years. Yeah, but we've got to show that you're going to generate enough income and cash to repay these loans. Yeah,
Serviceability.
exactly. Now, based on this information, yeah, you'll be able to go and find lenders. And not only will you be able to find lenders, you'll be able to find what type of product. Yeah,
Which is different from before, because now the marketplace, there's more people that, for example, have got themselves coordinated around lending.
yeah.
There are more people that are comfortable about where they sit in all of this as well. And there's been new entrants, different
There've been
forms of
new
lending.
entrants, and it could be that again, it's going to help you decide. It could mean actually do. It's not going to be. It's if I leave it to if it doesn't get back to normal till March, maybe it's not worth it. Or
Mm.
maybe I've gone too far into the negative in September to want to loan. Some people might be thinking, look, I was close to retirement. Yeah.
Yeah.
So it's going to help you decision make. Yeah. And give you clear indication of, well, not clear indication, but it's going to back up your assumptions, get you a bit more confident and go, do I go to a bank? Do I go to an investor? Do I go and get some insolvency advice? It give you some information. But if you're going to the bank, like you said, the banks have learned over this period. So listening to the lenders, a couple of things I found out was, yes, this three-pronged attack on information works. If you give that to the lenders, the bank will be very quick at getting back to you. Yeah.
Excellent.
Very quick at getting back to you. Yeah. The longer you try it takes to get them these three bits of these figures, yeah, the less likelihood you're going to get that decision, because there are going to be more questions. And then why are you so slow? Yeah, more question marks.
So let's say you're a business that already lent, you've taken a borrowing from your bank under
Yeah,
CBILS, but you found out it's not sufficient, which is not an unreasonable outcome given the extended period that we find ourselves in dealing
yeah.
with this virus. What have you heard about banks going, well, would they lend more against a
Very good
previous?
question. So there's two ways to look at it. I'll do the simple bit. All right. If you've done a bounce back, no. Yeah. You
If you've
can't.
had a bounce back loan,
You can't get a CBIL. Yeah. So what you have to do is give the bounce back money back and then apply for a CBIL. Yeah.
okay, which could be a huge hurdle for an SME.
Yes, yes. So if you've taken the bounce back, you can't do the CBIL. However, if you taken the bounce back, but only some of the bounce back, you can take the rest of the bounce. You can go back. If you've taken 30,000, you can
Mhm.
and you can go back and get the 20,000.
So what you're saying is, ignoring CBILS for a minute, if you haven't accessed all the bounce back loan, the bounce back
Mm,
loan's still there.
yeah,
But if you want to now go back and access the CBILS,
yeah,
you won't be able to do so
yeah,
if you've got a bounce back loan.
yeah. Exactly. So you can't have both at the same time. What you could do is
Oh,
apply for the
okay.
CBIL and maybe make it so that £50,000 of that CBIL pays off the bounce back loan.
Okay,
Yeah.
so part of the use of that C-bills is to replace the bounce back loan, clear that off. So
Yeah,
okay, that's interesting.
because that 50,000 wasn't enough. It's not. We were meant to be back to normal.
Yeah.
Yeah. Another good thing is you go first of all to the existing bank you've got the lending with. Yeah. If they're not able to help you, yeah, but you do have a strong case, other banks are taking. You can pivot. Yeah. What we're
Would they
finding out.
replace? Would they offer you an alternative one that clears the previous one and essentially replace it, like a mortgage, moving
They
your
can
mortgage?
do. They're able to. They'll come back. So if you've got 100,000 with one bank and you've figured out you need 200,000, yeah, but that bank is now you're not having no luck
They're
with
not
it.
in that marketplace. They're not prepared to. They've
Yeah,
made some
you can go
decisions.
to another lender that's doing the C-bill, and they might be able to package that 200,000 up. So
Okay.
I'm understanding that right now banks are looking at taking over other people's businesses as well, which they weren't before, like you were saying. They weren't taking on new clients. So they are now taking on new clients. Another thing is if it's not a C-bill, they've got other loans as well. There's other lenders as well. So if you go back to your bank and they can only offer you the standard product, then and the risk appetite isn't there, what do you do next? Yeah. So there are opportunities to get the tier 2, tier 3, tier 4 lenders. Yeah. But again, for that, you might need equity. You might need some sort of guarantee. The thing about the C-bill, up to 250,000, I think it was, you didn't have to put
The
guarantee.
government was supporting that. You didn't have to
Yeah.
initially. I think it was uncertainty, but they pulled that. It was politically,
Yeah.
unacceptable.
Yeah.
Okay, so I guess the broad message is, um, if you haven't already got on top of your management information, get that together
Yeah.
under the pronged attack that you
Yeah.
described, um, including serviceability in the future.
Yeah.
Well, first determine what you need in addition to where you're at, and what you'll have available to repay that, and
Yeah.
then you can go to the market. And there is now a bigger market. You have more choice. There are pros and cons. There
Yeah.
are rules that they're working out about what they're prepared to do based on your previous behavior, for example, on the bounce
Yeah.
back. But there are options, right? That's what we're
Options.
saying.
Yeah, yeah, absolutely. Now, what I just said, like, if it's outside C-bill, you might have to put some security up. Say you don't have any security, so there's bridging loans out there. So there's companies taking on the appetite for bridging loans, because again, I think businesses are seeing is like, if your historic data wasn't great, yeah, then there's no chance. Yeah, but if your historic data was great, you're struggling, they know that come September, if you come out of it, a lot of your competitors will be out of it. Let's say.
Mm.
Yeah. So they do want to back businesses that were great before COVID. Yeah. Again, depending on the sector. So you've got bridging loans, and right now the interest rates. I've spoken to a few brokers. The interest rates are around 8%, which is not bad.
8% for a bridging loan. That's
Yeah.
very good.
Yeah.
Yeah.
And they think this is temporary. Okay. When you do a bridging loan, it's temporary. Yeah. Because once your data is good. Yeah, once in after September, your data is good. Yeah, you might have some security, you might have some equity. Your projects, I've got, you've had some win-win projects here. You can then go back to the bank and turn it into a normal loan. Yeah, that's
It's,
the good thing about bridging. Yeah, it can be long term if you need it to be long term, but it's a short term fix, an emergency
it's
fix.
to get you through a period, so then when you face stability, you can,
Yeah,
or you repositioned yourself, you got some
yeah,
more clarity, you can go to a more traditional product.
yeah. That's it.
Okay.
And
Okay.
and Yeah. So and then what about then if you've got all the data, you've had a few blows, you know that business is there, it's great, yeah, but you're not getting anything now. So you need to speak to a business recovery person like
Yeah.
yourself,
Yeah.
yeah. And what we're finding out, there's lenders that are lending to pre-packs now.
Yeah. So
That's what I found really interesting. It's a bit more. It's more than 8%, yeah. But if you know you need to get, oh, I don't know as much about the process, but I'll hand it over to you.
well, maybe not in this video, but certainly, maybe that's the thing to talk about next is what is a pre-pack and how does that work? And maybe to look
Yeah.
at a case study or two, in the scenario that you have got a potentially viable business model, but your existing business essentially is too heavily indebted to
Yeah.
serve it. That's what we're looking at. They cut this. It's probably too heavily indebted, needs too much money. They can't get it. They're going to get out of that hole.
Yeah.
But there is a viable proposition when we come out of this,
Yeah.
and it's good to know there are people backing that. That
Yeah. Again, it's expensive compared to the C-bill. Yeah, bit more than the bridging loan, but there are lenders out there. And again, this is temporary. Try and get back onto your feet. Once the cash flow starts coming in, then you get yourself a bit of a record. Yeah,
yeah,
then you can restructure that loan.
I think when you're looking at a pre-pack scenario, you're
Yeah,
looking at a scenario where actually the business in its current form and the company within it just can't get out of its hole. You know, it
yeah,
can't get out of that situation. But whilst the lending might be expensive, the pre-pack does involve essentially moving valuable assets out of a company that's got the debt into a fresh entity. And when you
yeah,
compare potentially the saving and the recycling of jobs, opportunities for long term, it probably isn't as expensive as some people think.
yeah,
When you look at the round, you know, and this is the thing about this, we're trying to take a broad view, aren't we?
yeah.
Um, that's really interesting, Sheetal. And so you're feeling pretty positive about a lot of your clients, and I'm guessing now.
Yeah, because one thing we've done is we got all our clients' data live. Yeah, and whatever wasn't digitalized over lockdown, we digitalized. So it's live. So we've already got a war room. We've got a specialist department that's just going into their systems. If they don't have the MI, they haven't got all the data available. I've got a department that can quickly turn it around and get it ready. Yeah. Again, we've got really good lines with brokers, banks, lenders. We've got really good mentors as well. So now we've got like 9 partners. So even like making that decision before going to the bank, and we've got a really good team now.
Mm.
Yeah. So everything's there. So we're quite positive. Yeah, we've got that resource, we've got that team, we've got our clients get their data live, which is a big challenge. Yeah. So we're pretty positive.
I think we're in a despite the horrible nature of the second lockdown,
Mm.
hearing the positive news about a vaccine and the likelihood of a vaccine, and now two and possibly more. Um, you know, I think it's going to take time, but at least we can see the light at the end of the
Yeah.
tunnel. And yeah, it's going to be it's good. We can work towards this now, can't we? That's
Yeah.
been really good.
Brilliant.
I think a lot of people will benefit from that, and I certainly have. So thanks,
No
Sheetal.
problem.